Today, we're going to be talking about an article I came across that said, it basically said, here's three red flags to avoid, when you should run away from a deal. I don't necessarily agree with it. And I'm going to tell you my different point of view after this.
I'm David C. Barnett, and you're tuned in to Small Business and Deal Making, the podcast, YouTube channel, and blog where I talk about buying, selling, financing, and managing small and medium sized businesses while controlling risk. So, if you're looking to take control of your future through buying a business one day, or if you already own a business and you're looking to grow or exit, you've come to the right place. I talk about interesting things, I talk to interesting people, and I answer your questions every week right here. So, be sure to hit like and be sure to hit subscribe, and let's get to it. Are you thinking of growing your business or beginning a journey into entrepreneurship? Take a shortcut to success by buying an existing and profitable business the right way. Visit businessbuyeradvantage.com and learn more about my online training, group coaching, and consulting services designed to help you win.
All right. So I came across this article that was obviously geared towards people that were just considering buying a business for the first time. And it was basically saying, here are three, red flags to look for that you know you should run from. And honestly, I think it may have been written by AI. It was a pretty fluffy article, but I disagreed with many of the things that it said, and I thought, you know what? I should spin this into a video of my own and give you kind of David's take on some of this stuff. So, here's the danger, right? The danger is that as a new business buyer, you go out there, you see a business advertised, and you go there, maybe you meet the seller, you see how the business operates, and you fall in love with it, and you start to imagine yourself as the owner of the business. And then, supposedly these red flag elements appear, and you ignore them all because you're so enthusiastically in love with the business and you just want to buy it, right? Now, if you're afraid that that might happen to you, I know that at the beginning of every one of my videos, practically, I talk about Business Buyer Advantage. But if you go over to businessbuyeradvantage.com, do the online training, I teach you a system in there to prevent you from ever becoming emotionally attached to a business that you find. There's a process. You have to work out what's called the BATNA, which is your best alternative to a negotiated agreement. It's all explained there in the online training at businessbuyeradvantage.com. I recommend you do it. But here are the red flags. So, red flag number one is weak or missing documentation. And you know, I see this talked about so often in different articles. So, symptoms of this would be like sloppy bookkeeping, missing tax returns, vague expense categories. You know, and the whole idea is that, oh, this is someone who's trying to rip you off. They're trying to commit fraud because they don't have all their paperwork in order. I I got news for you. Many small businesses do not have any kind of professional bookkeeping. They have an accountant, but they choose their accountant based on the lowest priced accountant they can find, who doesn't actually help them with their processes and systems. And they kind of fly by the seat of their pants. And they could, in fact, be profitable cash flowing businesses and suffer from these problems, right? So while the mainstream sort of buy a business commentary might say, oh, if everything's not perfect, you shouldn't buy it. I will tell you that the majority of small businesses have some kind of problem in this respect with respect to documentation. Now, does it mean that if this stuff is weak or missing, that you should just go ahead and buy it anyway? No, absolutely not. There very well could be problems. There very well could be but real problems with this kind of thing. I'll even give you an example. There was a business that I spoke with the lady who bought it, and it was in the beauty and it was like a hair salon, beauty salon kind of place. And the owner said that the sales were a certain level, and the POS confirmed that the sales were that level. But when she added up the bank statements, it came into like 60% of what was being claimed. And what the seller was saying is, "Oh yeah, like that's all cash. I pocket that." Okay, so was she telling the truth or not? At that moment in time, we don't know, right? So, is it safe to buy this business? Well, there's ways to buy this business. Uh, I would not go and take, this what you heard from the seller and try to borrow money from the bank or borrow against my house or whatever, take all my savings and buy this business because it's largely unsubstantiated. But there are ways to buy this business safely, which involve the structure of the deal. So basically, you say to the seller, well, because you cannot document what you're claiming, I would still like to buy your business. This is what I will pay for it, but here's how we're going to structure it so that I don't face the risk that this is not exactly the way you've said. And the reality is that a lot of buyers would avoid this kind of scenario. And there are ways to do this kind of deal. You just have to have the confidence to stick to your guns and know what makes sense for you, right? And these are the kinds of things that I teach in Business Buyer Advantage. So that's number one, weak or missing documentation. Red flag number two, inflated seller discretionary earnings. So, I was looking at one of these the other day with our team here. Basically, a business that had close to 3 million in revenue was saying they had a $30,000 net income, but by the time the seller was done with all their ad backs, they were showing like a $600,000 SDE, right? So, where did all the other money come from? Well, it came from all the things that we always see. It came from perks, personal expenses, one-time items, wasted money on advertising that you won't waste, but I had to waste it, so I'm adding it back. Like all kinds of shenanigans like that. And so what I was reading in this article is that if the ad backs are excessive, that you can't buy it because you can't be certain that those ad backs are real. Well, again, um, to me, this is not a bankable deal. So I certainly wouldn't take this information to a bank and try to borrow the money to buy this thing, because it could very well turn out that the ad backs are in fact not real, right? Just like what that article was warning me about. However, I can tell you that there are plenty of small businesses out there with owners who, for whatever reason, sometimes it's just the way that they I don't know what's the best way to put it. Um, they they're either they don't want to pay taxes, or they've got some kind of disagreement with the way society works and they don't want to pay taxes, or they're just a little bit crooked and they don't want to pay taxes. Like there's 101 ways people do this, but there are very successful, profitable small businesses whose owners completely disregard the way that they're supposed to be accounting for tax purposes and are doing things that would get them in a lot of trouble with tax authorities, right? So, does that mean you don't want to buy the business? Well, there could be ways to buy the business safely, right? Certainly, I wouldn't buy the shares of this business, right? Because that would expose you to past activities. But there could be a way for you to do an asset transaction and purchase this business. Now, would I take what the seller was saying and borrow a bunch of money to buy this business based on that being the truth? Nope. Wouldn't do that either, right? So again, this is a scenario where I would want to structure the deal in such a way that the risk was shared with the seller, and in which a big part of that purchase price was protected through performance warranties. Basically, I would want the seller to, basically back up their word and say, this business is going to perform in this way for you. And if it doesn't, here's how we're going to make adjustments in your favor, Mr. Buyer. And, so yeah, there are ways that this deal could be done, is what I'm trying to say. Um, if, as a business buyer, you are looking for a perfect deal, then you should expect to have lots of competition on that deal and expect that that deal will sell for top dollar, because the perfect deal is going to be attractive to everyone. And in the world of small business, there's a lot of what they say, there's hair on deals. Okay. So again, this is the kind of stuff that I teach over in Business Buyer Advantage in the online training, about how you really look at these things and how you analyze them and how you protect yourself, right? Because the article warned that some of these ad backs may not be realistic, and that could totally be true. It does not necessarily mean, though, that there isn't an opportunity here. And that's what I'm trying to get at. Red flag number three, uncooperative or overly controlling sellers, right? So these are uncooperative people, right? Like they want you to fall in love with their business, but when you start to ask questions or you start to look for them to do things for training and transition or to help you learn the business, they get a little bit ornery. and they don't want to participate. They don't want to cooperate. They don't want to answer your questions. And it can give a real negative vibe, right? And I am pretty much in the camp that if you get negative heebie jeebies from a seller, it's probably, the sort of lizard part of your brain saying, "This person is dangerous. I should not give money to this person." I would tend to agree. So, when would the exception be in this circumstance? I would say the exception would be if you are an owner operator already in the industry, right? So let me just pull something out of the air, like tow truck operator, right? So if a tow truck business is for sale and the books are in shambles and the seller is really dodgy and you're not really sure what's going on, but you already own and operate a tow truck business, well, then you've got a better degree of understanding of what's going on in the business, and you can actually do a completely third party oriented due diligence of that business. You can look at the vehicles and assess their value. You can probably look at the call logs coming through auto clubs, AAA and CAA and stuff like that. You can, look at the receipts from their different, tow jobs and things that they've gotten. You can look at the, accounts for maybe some of the car dealerships or auto repair places they might be working with on a regular basis. And you can kind of give it a rundown on your own and figure out if it's of interest to you and if it makes sense to buy or not. A stranger who has never operated the business before in that industry, yeah, probably should stay away from that, right? It's probably not safe for that person. Um, and so, again, just to conclude and summarize here, are there red flags in small business deals? I would say almost every deal has at least one red flag. And it's not really about finding a deal that has no red flags. It's about learning how you manage the red flags, and how you can safely do a deal that protects your interests and allows you to make adjustments after the fact if it turns out something isn't the way that it was presented to you. Because at the end of the day, what are you buying when you're buying a small business? You're buying a cash flow. You're buying an operating, functioning business that's supposed to be making money and putting money in your pocket. And if they, the seller, can't adequately demonstrate how this worked for them and how it's going to work for you, it may not mean that the deal isn't there, that an opportunity isn't there. What it means is that you have to learn how to manage without everything being absolutely perfect. And that's what's going to set a trained person who understands deal making apart from somebody who just watched a couple of videos on YouTube and learned how to fill out a loan application at their local bank. And I would say that if you're going to get into something as risky as small business, it is the riskiest asset class there is, that it would make sense for you to invest in a little bit of know-how. And that's the stuff that we do over at businessbuyeradvantage.com. Anyway, if you haven't already, there is a plethora of goodies available over if you join my email list. If you subscribe, you get 7 free gifts delivered to you over the first few weeks that you're a member. And ever since we launched this 7 free gift promo back at the beginning of 2025, uh, hundreds of people have signed up. We've gotten all kinds of positive feedback. There's a bunch of those gifts are ebooks and things that other people are paying money for. You get them for free just by signing up to the email list. It's over at davidcbarnettlist.com. If you're not on the list, there really isn't any reason not to be. It's absolutely free. And I would encourage you to join. Anyway, with that, I hope that you found that insightful and interesting. And I will see you next time. Cheers.
So, how can you learn more about buying, selling, financing, and managing small and medium sized businesses? Easy. Go over to my blog site, davidcbarnett.com, where you can learn more about me and how I work with my clients. You can learn more about my books and courses that I prepared for you. You can find out how to subscribe to my email list, the YouTube playlists, and more. There's literally hundreds of hours of content there, all for free, and I'd love for you to be my guest. Special thanks go to Mark Willis at Lake Growth Financial, today's video sponsor. Mark helps people better manage their personal and business finances through the Bank on Yourself insurance strategy. This is something I've done personally and I've seen others use it successfully for years. Go to newbankingsolution.com to find all the interviews I've done with Mark and learn more about the advantages of these programs. While there, sign up for a free consultation to learn what this solution might look like for you.